Hey everyone, welcome back to Corporate Decoder, the place where we break down complex financial filings and make them as clear as a freshly wiped windshield, or at least slightly less foggy. Today we're diving into ETHZilla Corporation's recent Form 8K, and let's just say there's a bit of a surprise party for shareholders happening with this one. So imagine a company deciding to give itself a nice pat on the back by buying back its own stock. That's essentially what ETHZilla Corporation announced it's doing. Now this isn't just a small token buyback, this is a pretty significant move. They've greenlit a program to buy back up to a whopping $250 million worth of their own shares. Think of it like this: if you own a pizza and the pizza place decides to buy back some of its own pizza slices from the public. It often means they believe their own pizza slices from the public. It often means they believe their own pizza is a good deal at current prices. It can signal confidence from management in the company's future. This buyback plan has a deadline set for June 30th of next year, unless the board decides to keep it going. They're not obligated to buy all $250 million worth, mind you. It's more like a budget they've set aside for share repurchases. Management gets to decide when and at what price they'll buy these shares back. They'll be looking at what the stock price is, how much cash the company has, and whether buying back stock makes more sense than, say, investing in new projects or paying off debt. They might even use a special plan called a 10b1 plan. This is a neat little tool that lets companies buy back their own stock even when their executive might have inside information. It's all prearranged, so it doesn't look like they're trading on that specific knowledge. What's really interesting here is the timing and the other information in this filing. ETHZilla also gave an update on its strategy to accumulate ether. That's like digital gold or digital oil, depending on how you look at it. As of late August, they've gotten their hands on over 102,000 ether. They bought it at an average price of around $3,948 per ether, and now that stash is worth almost $500 million. That's a pretty substantial holding. On top of that digital treasure, they've also got a solid $215 million in more traditional cash or cash-like assets. So they've got a healthy amount of liquidity. Now let's talk about shares outstanding. This is important for understanding how much of the company each share represents. As of August 22nd, there were about 165.5 million shares of common stock out there. But they did mention that over 1 million shares are marked for cancellation. Once those are gone, the total number of outstanding shares will be a little lower. This can be good for existing shareholders because it means their piece of the company percentage-wise becomes a bit bigger. Remember that $250 million buyback program we talked about earlier? Well, when a company buys back its own shares, it reduces the number of shares out there. If the company's total value stays the same or increases, this can make the earnings per share go up, which is generally viewed positively by investors. It's like dividing a pie into fewer slices, making each slice larger. The company also mentioned that this buyback will be funded by their regular cash flow or from money they raise in other ways. This is also something to keep an eye on. Are they using strong profits for this, or are they borrowing money or selling more stock to fund the buyback? The filing indicates they plan to use working capital and potentially funds from at-the-market offerings, which means they might sell more shares on the open market to fund this. This could offset some of the dilution reduction from the buyback itself. Now let's look at the very nature of this report. It's an 8K, which is for current reports, basically reporting significant events that happen between their regular quarterly or annual filings. The company issued a press release on August 25th that detailed this buyback program and gave that ether update we discussed. Think of the press release as the company's public announcement, and this 8K filing is the official paperwork confirming that announcement. They also made sure to clarify that the information in this part of the report, including that press release, is being furnished and not filed. This is a common legal distinction. When something is furnished, it's more like providing information to the SEC, but it doesn't carry the same legal weight or potential liabilities as if it were officially filed and considered part of their ongoing disclosure obligations under certain anti-fraud provisions. It's a subtle but important point in regulatory language. So let's put it all together. ETHZilla Corporation is actively buying back its own stock, signaling a potential belief in its own value. Simultaneously, it's building a significant position in Ether, which is a bold move into the cryptocurrency space. Now, my take on this. ETHZilla is clearly making some big strategic bets. The stock buyback is a classic way to reward shareholders and signal confidence, especially when combined with their Ether holdings. Holding a significant amount of Ether is a high-risk, high-reward strategy. If Ether's price continues to climb, it could significantly boost ETHZilla's balance sheet and potentially its stock price. However, if Ether prices fall sharply, it could have a negative impact. The company's direction seems to be leaning towards embracing digital assets as a core part of its strategy, alongside traditional stock market maneuvers like buybacks. The success of this strategy will hinge on their ability to manage the volatility of cryptocurrencies and execute their buyback program effectively without overextending themselves financially. They have substantial cash reserves, which is a good sign for weathering potential downturns. A key risk to watch will be the correlation between ETHZilla's stock performance and the price of Ether. If the two move in lockstep, it suggests the market views ETHZilla primarily as a proxy for Ether, rather than valuing its core business separately. Ideally, management wants the stock to reflect both the company's operational performance and its digital asset holdings. Overall, ETHZilla is playing a dynamic game in both traditional and digital markets. The $250 million buyback is a substantial capital allocation, and their significant Ether position is a distinct strategic choice that sets them apart. Investors should monitor how these two pillars of their strategy evolve and whether they can deliver on the promise of growth in both spheres. Alright, that's our breakdown of ETHZilla's latest filing. What do you think about their strategy of buying back stock while also diving deep into Ether? Let us know your thoughts in the comments below. If you found this deep dive useful, please hit that like button and subscribe for more regular updates from the world of corporate finance. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next one.